At the moment, is all the advising, all the discussion about watching these big companies about to come to market and whether or not we'll get more exits in the IPO area?
Well, it's really interesting. At Fiat Growth, we're able to, and Fiat Growth is the consultancy of the Fiat Ventures arm of the business. So we get to advise a number of these companies, but very much stage agnostic, early stage all the way to public companies. And then on Fiat Ventures, we get to invest in these companies because we actually contractually get the right to invest. So in short, yes to your question. We have all this incredible data and education that we get by actually doing the work on the ground with these companies. And one thing that we are seeing is a lot of very optimistic things happening in the public market right now. But also at the same time, we have to be really thoughtful in terms of how we're building products and how we're building strategies to bring some of these public companies to the public markets. So in terms of the trends we're seeing a number of trends. I mean, I'm hearing a lot of talk about AI and generative AI right now.
You don't get it.
And one of the biggest things is everyone wants to shift their business to an AI-first business, where one thing that we are constantly pushing is AI is an incredible tool, it is an incredible feature, but it's not always the right product to shift to. Because what all these companies have is an incredible amount of data that AI can help empower to create really, really valuable features to their core products.
I mean, we're just talking to Mandeep Singh about the power of proprietary data. We're also talking about, earlier in the show, the fact that ARM might not be selling as much of its companies. Well, the amount raised might not be as much, and maybe the valuations are being questioned as it goes on its roadshow. Ultimately, how important is it for Stripe, for example, an area that you're going to be very focused on, a company that is in the world of fintech, but also looking at the public markets at some point?
Well, I think Stripe's in a great position. One thing that we've seen over the last, call it year and a half here, is us moving away from this application layer to the infrastructure layer of fintech. And just to break that down, the application layer is very much consumer fintech. You've seen like the crazy growth over the last 5 years or even 10 years of neobanks like Chime and other ones like Varo Money. I could keep going down the list there. But now we've moved into this infrastructure layer, and that's something Stripe was ahead of its time on. These are the fintech technologies that run the entire fintech ecosystem, but we can't necessarily see and feel it. Like we know that Stripe is powering the back end of Stripe, but we don't know it's Stripe. Or I'm sorry, the back end of Shopify, but we don't know it's Stripe. So one thing that we're seeing in the fintech market today is this infrastructure opportunity where we're going to see over time is every single action we make on every single app is going to be run by this fintech infrastructure. Every time we purchase, every time we get a loan, every time we refinance debt. And so I believe Stripe is going to see a big headwind here over the next couple years as they decide what their next step is.
Hey, Drew, good morning from San Francisco. It's Ed here. With everything that's happened in generative AI, has that pushed you at Fiat back to more sort of sole focus on fintech? And the reason I ask that is, look at Salesforce or NVIDIA, these big incumbents in AI who deploy big sums of capital. They've really muscled in buying up. I think the PitchBook data shows Salesforce was the most active investor in the first half of this year. So do you look at that and say, you know what, you guys have generative AI. We'll stick with fintech?
Well, no, I actually think that generative AI is going to be a massive add to what's happening in fintech. All these fintech companies, one thing that they have that most other industries don't have in spades is data. And that is consumer data, that is, call it data across the entire customer journey. And when I say the customer journey, I mean the moment they download the app to the moment that they fund a bank account. And being able to take that data and organize it through generative AI will be able to not only enhance the customer's experience and the customer journey, but it will also make it so we can add additional products in the most efficient way possible. I mean, some things that we always think about, and we have a number of companies that do this is, for example, like the home loan process is one that is very much human capital intensive. And one thing that we've seen AI be able to do is actually make it so we can take a lot of humans out of that and be able to make it so instead of it being a $20,000 process to complete, you can do that now in with $2,000 or $3,000. So not only are we seeing companies becoming more capital efficient because of AI, but we're also seeing them be able to just become better businesses and more healthy businesses over time.
One area of concern has, for example, we mentioned Stripe and the fact that it's going to be having a load of tailwinds. Well, Adyen over in Europe has just perhaps made everyone sit up and worry about the fact that there aren't enough moats that can be consolidated. How much are you seeing really moatable blockable areas of fintech that others just can't replicate?
And that's a really great question. I think what we've seen over the last, call it decade, is really the fintech brand wars, where we've seen a lot of companies really try to build their moat around brand. And one thing that we have noticed is that is very capital intensive. You need the market to really be humming, and you need to see venture dollars leaving pockets quickly, and that has shifted. So what we're seeing now is especially in the private markets, is folks are no longer just trying to build brands, but they're trying to build sustainable businesses. And that brings me back to this transition of moving away from the application layer to the infrastructure layer. One thing about the infrastructure layer is these are B2B businesses. These are B2B2C businesses.
You ain't gonna see them on Instagram.
Yeah, exactly. You will not see them on Instagram, but you will feel them in your life, and you might not even know that you're engaging with them. And so really these API-driven types of business models where instead of a company or a large company having to go build a team of 100 different engineers, they can just partner with a company and help that enhance their technology versus having to buy a technology. And that is a big shift we're seeing with some of these public companies, is they're no longer buying businesses and taking that money off the balance sheet. They're partnering with businesses and embedding them into their current infrastructure.